Hi, my name is Jordan Wilson. I'm on the board of directors with the CFA Society Saskatchewan, and I'm joined today by Dan Sumner, who is also a CFA board member. Dan Sumner is a director and Senior Investment Counsellor at BMO Wealth, where he counsels high net worth families, foundations, and corporations on their long-term investment and financial strategies. Prior to his current position, Dan worked in mining, oil and gas, and banking at BHP, Talisman Energy, and ATB Financial. Dan holds a Bachelor of Arts in Economics from the University of Saskatchewan, and he also holds a Master's in Economics from Queen's University. Dan obtained his CFA Charter in 2013, and he holds or held nonprofit positions with the Economic Society of Calgary and the Calgary Chamber of Commerce. So I'd like to welcome Dan and get into a discussion on his career and academic background. So you have an extensive economics background, Dan. And on our current board, we've talked with Juliana Wong, who has economics, and Mark Smith-Windsor, also economics. So it almost at times feels like we have an economics society as opposed to a CFA society. What led you to initially pursue your Bachelor's of Arts in Economics from the U of S?
Yeah, that's always a good question, and to be honest, I think I kind of have a lousy answer, which I think might be the norm for a lot of people. I literally, you get into university. I was one of these people who didn't really know what I wanted to do. You're here in Saskatchewan. You're not always exposed to, everything that's out there in the world just from living in one place and growing up in one place. And so I just took a smattering of classes, and I didn't even really know what economics was. And then lo and behold, it was, this is good. So I went with that.
Why was it good?
It was, it just came naturally. I didn't, we had a month in, you have your first test, and you kind of going through the stuff. And you're like, okay, I got it. Think I got it. Okay. Study for the test a little bit, and come back and you get 90 on it, and it's like, oh, I hardly studied. And then this other subject where I worked really, really hard and came out with like a 78. Okay, this seems like there could be something to this.
Okay. It's interesting because my personal experience was kind of backwards. When I was in college, I enjoyed economics, but I learned it, I didn't really understand it. And when I went through the CFA program almost a decade later, and it's so heavy on economics, my personal life and my experiences with things like marginal utilities, elasticities, these sort of things, I could look at them then and say, it makes sense. But in college, I never had that personal background to understand the connection between different things. So interesting how you felt that way.
Yeah.
So you got your economics degree from Saskatchewan. And then later you pursued your master's. Did you do that right afterwards, or did you wait for a period?
It was right afterwards. Yeah.
Now, first of all, why did you get your master's in economics when you already have a bachelor degree?
At the time, I thought I wanted to head in the direction of finance. Once I was through my undergrad, to do a master's in economics, it's only a year commitment, so it isn't really a big commitment, and it's a bit of a way to differentiate yourself. And actually, there's a ton of economics graduates, but there isn't as many master's graduates. So it's just another way to differentiate yourself.
Now, on that point, and I think it was Mark Smith-Windsor that raised the point, was that there is so many bachelors of economics graduates out there that if you want a career in stereotypical economics, that differentiation by adding the masters is a big thing that you should do if you want that to separate yourself from the herd for a job. Is that part of your thought process?
Yeah, exactly. That's exactly it. And I got to be honest. Like, even coming out of university, I think I was getting closer to having an idea of what I wanted to do, but you're still not. I still wasn't really sure. And it felt like maybe this is something, it's only a year commitment. I kind of just applied to a few different schools and I got into a decent one. Seems like, okay, this is probably something that's going to pay off in the long run. Yeah.
Now, when I was at University of Alberta in accounting, a couple of my professors had talked to me about pursuing my PhD, which, if you'd seen me as a student, would have been a far cry from reality. But one of the things they said to me was, you should consider, if you do your master's in business or your PhD, going to another university in a different city. And in my own experience, by the time I got to third and fourth year of finance and accounting, we were writing the same exams as the MBA program. They just had exact same exams, just different numbering on them. And I'm curious as to, was that part of your thought process to go to Ontario and take the master's at a different university?
Yeah, absolutely. So I was counseled to do the same thing. Not maybe by all professors, but definitely by a few of them. And and in hindsight, they were absolutely right. I grew up in Saskatoon. I lived there my whole life, and then you go to university there. Even by the time I left, when I was very much an adult and able to stand on my own 2 feet, there's still a big chunk of life experience that I hadn't had just from kind of always living in the same place.
Yeah, and I think I saw that when I articled as an accountant, is that many of my articling students in Calgary were articled. They were still living at home, and mom was making them their lunches and cleaning their clothes.
Yeah.
Whereas I'd moved down from Edmonton to Calgary, and I'm living on my own, and I'm trying to put it all together. And what I found in the accounting world was the people that were like me, that if we didn't pass our courses and our levels, didn't get promoted, didn't get the raises, that was economically difficult. Whereas the people that were still living at home didn't have that same pressure. And there was definitely a correlation between doing things the harder route and passing. And so I do think there's an increased cost, obviously, about moving to a different city. But if you can afford it, even undergoing some hardship, the life advantages should be factored into the decision.
Yeah, no question. And I'll add, one or two thoughts. Going to another university, it's just, it's different in ways that you just don't even realize, right? Like, just different professors, and you're exposed to a different group of people, and you don't even know what you're going to get. And I'm going to guarantee for most people, even just having something different is probably going to be beneficial, in and of itself. And I would say, in honesty, we actually talked about this when we were in grad school. We noticed that some of the kids who did their undergrad at Queen's and then did their master's at Queen's, it seemed like they actually did a little bit better. Maybe got slightly higher marks, or kind of for the same amount of effort. Maybe just a little bit. And I think it was because to them it was like a degree of familiarity, and and so that was good. Like, good for them. But there was I think that shows there was a set of things that maybe they weren't necessarily doing that other people who were going in a new situation were having to do.
Yeah, and I would actually counter what you're saying, because someone that's listening to this might say, oh, if I go to the same university, maybe I get better marks. So if I'm comparing myself to someone else,
yeah,
I've got a higher GPA, grade point average.
Yeah.
Now, the reality is that you're applying for a job with me, or you're applying for a job with someone with an economics degree themselves, and they understand that this is the way it goes. And so for me, I would rather see someone with slightly lower grades who took on that challenge of moving to a different city or different area and developed all those life skills than hiring someone with slightly higher marks who just took the path of least resistance. So I think that to me, if I'm on the end looking at resumes, it's less about the marks and it's more about what did they go through? What was their learning curve? What did they come out of with life experience? So don't just get fixated on marks if you're listening to this. It's the holistic thing, and the person that's reviewing your resume should understand that.
Yeah.
So one area, and I mentioned this in the intro, that I think out of our 12 board members, 3 of them have economics backgrounds. And I've got 2 questions, but the first one would be, if I have a bachelor degree in economics, are there any stereotypical pure economics jobs for me out there?
Yeah. I mean, that's a good question. I got lots to say about that. So there are, but you know, they're few and far between. Now, the vast majority, I would say the vast majority of economic specifics jobs are with government, you know, some level of government one way or another, you know, and there's a lot of economists working in Ottawa. And some of those jobs are, even though they're called economists, you know, they may not really be doing pure economics type work, but you know, they're fairly close to it. Out in the private sector, there is a handful. You know, it's probably 5 to 1 or 10 to 1 public sector to private sector. So there is a number, you know, but I would say, again, coming out of my master's program, you know, people with the job title economist, there might have been, you know, 2 or 3 of us out of 40.
Then my second question is, and I don't know how smart you were in college as far as foresight, smart, in that the beauty of economics to me is it's such a cross-pollination in every industry. You have to, if you're an accountant, especially a financial accountant, you have to understand economics. If you're in finance, you need to understand especially macroeconomics. So when you were starting out, say at your bachelor's degree in economics, and then on to the master's, at the time were you thinking about, yeah, I want to be an economist because I'm good at it? Or did you realize then that this opened the door to so many other areas?
Yeah, I mean, to be honest, I would say I actually kind of saw it a bit the opposite. It was like, this economics degree, you know, what do I do with this thing? You know, it's not like I can, you know, I have an accounting degree and I'm going to go be an accountant. It's like, now I got to figure out like what I'm going to do. And I would say that was pretty common with a lot of economics grads. You know, but that can be maybe difficult at the beginning, but it can also, then it can pay dividends right away, or it can pay dividends in the long run, because, you know, I would agree. I mean, the economics grads you see, what they go off and do, like it can be anything and everything. You'll see them in, you know, being lawyers, or going on to be lawyers, going on to, you know, be CEOs of companies, you know, the whole gamut. There was a good number of economics grads that were running the oil companies in Calgary when I was there.
Now, to take that thought, and we'll get into this more with your business background, but to me, if I was a young person, or if I was mentoring or advising a young college person that's in economics, I would probably tell them, figure out what you actually want to do, because there's a good chance you're not going to be an economist. So maybe that's taking, in Western Canada, agriculture, petroleum engineering, geology, complementary hard skills that will smooth the path into a economics related position after graduation. And you mentioned, you know, law or accounting is obviously a huge carryover type industry. Finance, the same. But it doesn't have to be that way. If we look at Elon Musk and Silicon Valley, these sort of things, where we're trying to sort of say, where is the supply and demand going for the future? What industries will be in demand? These sort of things.
Yeah.
So to me, that would be good advice to give younger people in economics, is to look at how they want to match that up on their career side.
Right. That's an interesting point, and and I would say, to be honest, in hindsight, I would say that was almost exactly what I did, but maybe without being aware that that's what I was doing at the time. And I think, I think it's done exactly what you said, which it gave me some good exposure and helped kind of, maybe not, didn't help right away, but over time it was like, okay, oh yeah, you've done this, I've done that, okay.
But again, to me, if I've just got my bachelor's of economics and there's 1,000 other bachelor's of economics people applying for the same job,
yeah,
you want to separate yourself from the pack by showing that you have other complementary skills that you can bring to the table.
Yeah.
And to me, in some ways, that's probably just as valuable as getting a master's. You're just managing to sort of cut that 1,000 people in competition with down to 20 people.
Yeah, exactly. Let me just add one thing. Yeah, I mean that's exactly it. And getting whatever 90 A pluses all the way through university isn't the only way to differentiate yourself. You can just have decent marks, but then do other things around it that kind of show that this is what you like to do, and you have some exposure to a certain area, and that can stand well above just having a big number on your report card.
Yeah, and even just to digress, when I was interviewing to article in public accounting, at the time I was heavily involved in martial arts. I was competitive fighting and teaching. And I remember interviewing with a few firms, and they loved the fact that I had all these extracurricular activities, because what they told me is when you're articling as an accountant, you're working long days, and then you've got to find time at night, maybe 2 or 3 hours late at night, to study for your courses. And what happens is the people with the A pluses, they are living in the library all day. They go to their class and then they're in the library. They don't have that time pressures from other things. And so that was one thing that they really liked, at least for me in the public accounting side, was that I was involved in so many other activities that were draining my time that I had to be very efficient. So again, that's another area where if you're giving me your resume to hire, I'm not just going to go, okay, I'm infatuated by the fact you have a plus or a 97% average. I want to see that you're well-rounded. And also well-rounded people tend to be better conversationalists and have better social interaction skills, which as you go up the career ladder, become the key traits that we want when we hire people.
Yeah, exactly.
So we get our Masters of Economics from Queen's University. And for those of you that don't know Queen's, I believe that's in Kingston, Ontario.
Yes, sir.
You're one of the lucky ones. You're able to get a job with ATB Financial. And for those of you that aren't living in Alberta, ATB was originally created as a Crown Corporation, Alberta Treasury branches. And I think to this day, Mark Giordano from the Calgary Flames does their advertisements on TV. So you end up with ATB, and you're actually fortunate enough to be hired as an economist. And last year I heard a webinar from one of your old bosses, who was quite a switched-on fellow. So tell me a bit about what you did as an economist with ATB.
Yeah. Yeah, definitely. So, yeah, I mean, I was really, really fortunate to get that role. It was, a bit of a unique role. There was 2 economists at all of ATB, a place that would have 5,000 employees or, thereabouts. And so, we're kind of a small, unique team, just kind of me and my boss. And I mean, I can tell you the first thing I realized was that, okay, this is, I got a fancy degree and, I was really good at economics, but I have no idea how to write. And, the first thing I had to do was, of course, write about what's going on in the Alberta economy. And, I didn't know how to properly use an apostrophe. Going all through my economics degree, I don't actually think I ever had to write a report in an economics class. It was always just understand concepts, write tests, understand concepts, write tests. And so I realized, writing was is a major part of things when you're working as an economist, and I didn't really know how to do that.
Why is that? Who cares? Can't you LOL and talk to you later with text messaging? Why is writing, and to extend the writing, why are strong communication skills important, not just in economics, but in any business?
Well, nobody's going to take you seriously if you're using LOL and emojis. But it's the communication skills, it just crosses everything. The better you can write, and it's also comes down to speed as well. I had to write these reports. And what we would do is there would be a release from Statistics Canada that would come out in the morning. And I think it usually came out at 7 or 8 a.m. Eastern time. Now, luckily, you're in Alberta, so that's 6 a.m. your time. But we needed to have our commentary out on it by 8:30 or 9 a.m. So you only had about 45 minutes to get this thing done. And it has to be, it has the bank's name on it, it has your name on it, it's going out to clients, it's going out to the media, it's got to look professional.
And I think that's the one thing you said in there, it's got the bank's name on it, it's got your name on it, is that I was trained that everything that I produce, either for myself or under the corporate name, has to be perfect because it's a reflection on the organization or your own business. And again, I think to a large extent, the pure business faculties, or in your case, economics faculties, still do not do a fantastic job of imparting or developing business quality communication skills in students. And that's further exacerbated by the fact that we are in a text message world. And so no one is writing cursive long form letters to each other. It's just all short contraction type things. And so I think that is a skill set that is worth developing while you're in school or just starting out as a professional.
Yeah, those are, those kinds of things, writing, communication, when presenting and speaking, it just doesn't really matter what you do in life. At some point in time, it's going to come in handy to be able to do that kind of thing. And one thing to add, I would say, I do think the business schools do a better job of preparing students to do business writing than I got through the economics program. But it's just, there's no perfect preparation for the real world.
Now we'll touch on soft skills a little bit later, but while we're in the area right now, maybe we just hit on that. In my experience, and as I've discussed in other sessions, I was fairly senior at UBS. Now, my experience is that as you move up the corporate ladder in any bank or financial institution, law firm, whatever, when you graduate from college, you need to have the technical chops. I need to calculate elasticities and marginal utilities. I need to calculate modified durations and asset correlation coefficients. But with each passing year, it's the interpersonal skills, it's the presentation skills, it's the communication skills. I could be the smartest guy in the world technically, but if I'm doing a presentation to the group executive board at UBS and I cannot convey my technical expertise to them in a way they can understand, then there's no way I'm getting promoted. And there's no, I've seen that cold. And so it's one of those things where with each passing year, as you move up, the technical skills don't matter. It's the soft skills, it's the communication, the interpersonal. Now, did you see that, or have you seen that in your career so far?
Oh, no question. Absolutely. When I worked at BHP, I think we used a term for it. It was called executive presence. And, and it was exactly that. The further you get up the chain, what is actually mathematically differentiating people who are already senior in an organization is very, very narrow, because these are all smart people who work hard and, eat their Wheaties and do everything perfectly. But the perception that they, how other people perceive them, can really, that really gets to be the big thing that differentiates them. Yeah.
Yeah, that's so true. And the story I've told in a few of these other sessions I've done is I was in an executive training, or let's call it that, where they took young executives and they'd send them off a couple of times a year to retreats with other young executives. So it's a networking thing, which is important. But we also would do a ton of stuff like, in one case, they would videotape us leading a management meeting. And then you'd have the expert come in and look at your body language, your nonverbal communication, even the words that you used, because you found that you were giving much different perspective than you thought you did. And that's what they really spend their time on. No one was sitting there going, okay, we're going to teach you the cutting edge fiduciary or Basel Accords banking laws. No, we need you to be able to run a meeting, manage your staff, lead a team, these sort of things. So again, that's something that I wish I would have developed when I was younger. And again, we'll circle back to soft skills in a bit, because there's a lot that I think we can discuss. So now you've decided to make a move. You were a peer economist, ATB Financial. You were getting up in the morning, analyzing Bank of Canada data and pronouncements. And I'm not sure what years you were there, but you might have been covering irrational exuberance, or whatever the Fed in the US would be pronouncing. So you make a move into industry. First, you're with Talisman, which is an energy company. Mm-hmm. And then later you went to BHP, working that's when you moved to Saskatchewan again to work with their potash organization. So first of all, tell me what the difference was going from a financial institution like ATB into pure industry, as far as maybe the mindset, or what was the key drivers for them that might have differentiated from ATB?
Yeah, so first of all, in all honesty, it was I think I went to Talisman in 2012, and so this was Calgary in 2012, and it was rocking with oil prices. So I got sucked into the oil and gas fund. Truthfully, because they offered me a good paycheck, so which is totally a valid reason. So I really wanted to give this a shot, and what it was I realized it was much more of a, internally focused corporate finance type role, and for like an oil and gas company, they're everything they do is highly confidential, and they're very careful with it, and anything that gets released publicly is scrutinized, by 30 different people. So I would say, really, that was the big difference. It was an internal focus there, as opposed to what I did in finance, economics. It was more of an external focus. I was talking to, public. I was talking to clients. I was, you had to be able to speak in clear terms. Whereas when you're in corporate finance, at a big company, and I maybe wouldn't focus too much on oil and gas or Talisman specifically, because I think there's a lot, they're all pretty similar. It's, things are much more, the rules are much more clearly defined. It's a much more structured environment. You're preparing these very detailed, white papers and PowerPoint slide decks, and they got to be like perfect, before an executive lays their eyes on them. And I think your attention to detail and really your kind of ability to maybe just strongly do the simple things, like totally correct every time, those can be really strong assets there.
Now, I'm not sure how the structure was, but when you talk about doing the right thing every time, I think in a lot of companies, especially larger companies like a Talisman or a BHP, is that you often develop a reputation for who you are as an employee. And there's lots of teamworks, and there's lots of small groups that are put together to do jobs. And if you develop a reputation for being a can-do person, then you're wanted on all these projects. And it's the projects that get you noticed. And in my case, that's how I ended up in Zurich, Switzerland, was because I was asked to lead a team in the Bahamas on a highly visible project that went up to the very highest echelons of UBS. And because we ended up doing a good job, they said, "Oh, you must be responsible, not your team who did all the work, and come to Zurich, Switzerland, and work in the head office." And if you do a bad job, or you're perceived as being the lazy person who can't get things done, then you do get shut out, regardless of how strong you are technically.
Yeah, absolutely. And I mean, it's so competitive in those environments. So you got to be able to do it all. Just being strong technically is going to, that's important, and that's going to help. But it isn't going to, get you to the Bahamas or Zurich.
Now, you moved over to BHP, and I'm assuming the main factor behind that was that it was an opportunity to move back to Saskatoon, where you were from originally. Now, at ATB, you were pure economics. At Talisman, kind of economics, maybe a bit of analysis in there, maybe some project work. But now you're more into analytics and analysis at BHP. And from your bio, it looks like you did some analysis on major and minor investments, development projects, technical evaluations, some mergers and acquisition work. So tell me a bit about how you're able to segue into those areas from being an economist in the first place.
Yeah, so I would say the BHP role was my most technical role. I worked in two areas, but the first one was valuations. So we literally would build these giant spreadsheet models in Excel and come up with calculated NPV and IRR and these financial metrics on different projects. So you get all the information for a potash mine, you build this giant monstrosity or Picasso Excel model and run all these different scenarios, so we can say, hey, if we build this kind of mine, and what does it look like, and how do you maximize the NPV? Yeah.
Now, you got your CFA pretty much concurrent in timeline with making the move to BHP around that 2013 time frame. So having those finance skills, because you would have taken at least levels 1 and 2 before, that probably gave you a good knowledge of IRR and NPV, and the present value and the return calculations that you need for the modeling.
It definitely didn't hurt. Yeah, absolutely. At the time, I guess when I was at BHP, it felt like I maybe wasn't using some of the stuff I did in the CFA as much as I thought I might be. But in hindsight, I think it's all very intertwined, and my experience was probably fairly normal. And that's why they say the real world isn't like the textbook. It's maybe similar in shades of it, but it isn't exactly like it.
Yeah, we didn't get into this question, but one thing I found is that I had an accounting major from university, and then I go work for Price Waterhouse, and I strut in there thinking that I know accounting. And I tell you, it took me about a week to figure out that university accounting and real world accounting are completely separate animals. And if I didn't have my mentors at Pricewaterhouse to explain how the real world works, I would have been completely lost. And so there's the technical side, but then the reality tends to be different in a lot of cases.
Yeah.
And did you find that at all at ATB? Besides the ability to write reports, were you able to walk in with your economics training and just dominate on day one, or did you need some support from your boss?
Yeah. No. I don't know. I mean, definitely didn't dominate on day one or day 100. No, it's never. I mean, it's never the same in reality like it is in the classroom. You can hopefully, the better you can apply things from the classroom, the better off you'll be. But the end product is a very different thing.
Now, when you're talking at BHP, you said that often your CFA training didn't really come into play as much as maybe you thought or hoped. But let's turn it the other direction. Your CFA program that you went through with an economics background. Now, financial analyst, is there a lot of economics in the CFA program, or was that just a complete waste of time?
Well, no, there's some economics in CFA. I mean, I think it's 5% or maybe 10% on a couple of levels. But no, I mean, it was it definitely wasn't a waste of time. I mean, I think maybe CFA is maybe a bit more technical. Than in many ways economics is, which can be kind of, economics in the classroom can be quite, math oriented, and I guess I wouldn't call it technical, but I would say it almost, very, very math centric. But in reality, it's very subjective. You can, as long as you can spin a good story and make it sound good, you can talk about the economy.
Yeah, and I think that I'm just kind of giving you a hard time because having gone through it myself, I think actually economics is underweighted technically for what you actually have to know about economics. It just permeates every aspect, especially when you get into the levels 2 and 3, and it's all about analysis and synthesis, is that if you don't understand the macroeconomics especially, it's a hard time getting through the other aspects because you have to understand those concepts to be able to apply them against, say, financial reporting or the technical side.
Yeah.
So I think that the economics is a huge advantage to getting through the program. And in talking with Mark and Juliana, they both agreed with that. So, and I think it's also, again, we've said that in a few of our other sessions, I think the CFA, Chartered Financial Analyst, is a bit of a misnomer or poor marketing because so many of our CFAs have other backgrounds that they bring to the table and they're not pure financial analysis. Having that economics. What you did at BHP, yeah, it's got some financial analysis, but it's not, the stereotypical sitting in a back office analyzing, should I buy Amazon or should I buy Google? There's so much more that you can do, and that's part of what we're trying to do here in this series is explain what people do in reality as opposed to maybe the stereotype.
Yeah.
So you're at BHP, and then you decide to go to BMO and actually work as a investment counselor. Now, what was the catalyst behind that decision?
By this time, that little detour that I took after ATB over into the corporate finance sector, let's call it, I was done with that one and ready to get back into back into, finance economics world. And then so here I was living in Saskatoon, and truthfully we were, by now I was married or engaged. I can't remember when we actually got married, but I think had a baby on the way, and it was like, okay, life's starting to get real, and and the reality is these are the sorts of things that often dictate where you end up or why you get into certain things. Anyways, and then, so here I was in Saskatoon, and not an easy time, when you got a baby on the way, to think about moving to a big city or something. Anyway, an opportunity came up in Saskatoon, and I think I was fortunate enough to have a chance at it. And honestly, at the time, one of the main reasons they told me was that literally they decided it was essential that somebody individual have their CFA designation, and in Saskatoon market there isn't that many charter holders, so it really came in handy then.
Now, in the intro, I described you as a director and senior investment counselor at BMO Wealth. What does a senior investment counselor do?
Manage money for clients. In the investment industry, there's maybe two main streams of financial advisors. I'm sure there's more than this, but these would be two big ones. So investment counselor side, which is the side I'm on, we're doing discretionary investment management, which means that you're managing money for people. You agree on how you're at a high level. This is how we're going to manage your portfolio. This is what your objectives are. This is your situation. I understand that as your investment counselor. I just do it, and I have the legal discretion to kind of do it, and have to do it in your best interest. You're a fiduciary.
Now, do you run managed portfolios where you put them into a defined portfolio, or how do you run the discretion? Does Dan Sumner wake up in the morning and say, I got a hot tip on Bitcoin and that's what I'm going to invest my money in?
Sometimes I want to do that, but no, I'm not allowed.
Why aren't you allowed?
Well, why aren't I allowed? I think the reality of it is that a big company can't have 50 investment or 100 investment counselors going off and doing 100 different things. So sometimes how these things work on paper and how they work in reality are two different situations. But honestly, your description of it is reasonably accurate. We have a lot of model portfolios, and you maybe are staying close to the model, but it's we do have discretion to go in certain directions, steer things in certain directions. Some of that stuff requires client authorization, other things don't.
Now, let's say you have 6 different discretionary portfolios. Do you just sort of pick a number out of a hat, or how do you say, Mr. Wilson, today I feel like you're a number 4 out of 6. How do you assign people to their portfolios? You talked about fiduciary earlier. What exactly does that mean, and does that fit into the process at all?
Yeah, so it's all about it's about understanding the client's individual situation and their needs, understanding their situation and matching those needs to the assets. So
is there anything called, say, let's coin a phrase here, know your customer?
Yeah, yes.
Is there any regulations in respect to that?
Yeah, know your client, KYC. Exactly. So that just goes a level deeper with discretionary investment management.
And that's kind of your first process when you take on a client, is to develop the KYC, possibly an investor profile, so that you understand their objectives, their constraints. Because you can't be a fiduciary, and a fiduciary is someone, if we cut out all the legalese, basically treats the money as if it's their own.
Yeah.
And so as an investment counselor, you probably need to do a fair bit of legwork up front to understand where your client's coming from, what their needs and objectives and constraints are, plus their risk tolerance, to build up that profile to decide what is the best investing route to go.
Yeah, exactly. That's exactly what it is. And yeah, the key is you manage the money as if it's your own. And that's the most important thing, is like you said, you understand. I said client situation, but you unpack that a little bit with risk tolerance, time horizon, whatever, special circumstances, all the things. That's what it's all about. Yeah.
Now, I would assume that you bring some good value to your clients. Not as much as me, perhaps, but no, it's you've got that economics background, so you understand when the Bank of Canada or the budget comes out, what on a higher level the ramifications are. You've worked in natural resources, mining, energy, so you have an understanding about two of the three biggest industries in Western Canada, agriculture being the third probably. And even your time at ATB, you probably delved into the agricultural side. So I think that that's an interesting thing that you bring to the table besides the CFA, the technical side of investing, is that understanding of the key industries and the key economic factors. So to me, I think that, again, if I was looking for an advisor, that's probably more relevant to me if I'm assessing advisors than having maybe that CFA or another technical. So I think that's an interesting thing. Would you agree? Or
oh, I mean, no question. There's different ways of looking at it, right? You can hear that and say, oh, okay, that just lets you talk the talk, and okay, that lets you talk. Well, but talking the talk is a very fundamentally and mathematically very important part of my job. It allows me to understand my clients in the best way possible, and then also communicate what I know to them so that they can start to understand. They can understand better what I'm saying and what I'm seeing on my end, and we can do a better job investing money.
Yeah, and I think, for me, one of my big beliefs in wealth management is educating, and the fact that the client, it's a partnership, it's a collaboration, and if you don't know the industries and the jargon and you can't communicate that, then it's a lost cause, because it becomes a dictatorial relationship where thou shalt do this. And I think today, in the old days, and this is why mutual funds in Canada were so expensive for so long, because, just sit back and we'll take care of your investments. And now the client wants to be a partner and wants to understand what's going on. So I think that's important, the communication side and the understanding and the empathy side.
You took the words out of my mouth. I couldn't agree more. And I would say my time doing this role has just, that's what I've really discovered. It allows you to manage money for clients better. And it also allows clients, from clients' perspective, for them to be, more, like you said, a teammate to you, because we really are. We're on the same team. They do well, I do well. I do well, they do well.
And I think that's sort of another aspect of the fiduciary side, is being part of the process, being part of the decision making, so that they understand what you're proposing. And I would also say on that line is that, in my experience, the more the client understands what the process is all about, and I'm talking even bring it back to understanding the risk-return relationship, all the compound returns, all the core concepts, because the more that they understand, the more then you can get into more niche investing. And I'm not talking scary niche, but if I said to you, if you were a finance person, if I said to you, Dan, I think maybe covered calls might be an interesting investment for your portfolio. Oh, options, derivatives, that's scary. I can't do that. Whereas covered calls can actually add income to your portfolio. Plus, they sort of hedge or lock in your position if you are considering divesting. So in many ways, a covered call option strategy is a risk minimization or risk reduction strategy.
Yeah.
But without understanding the concepts of risk return and diversification and asset correlations, you can't make that move, or you shouldn't make that move into more complex investing. But that might be the best thing for someone. And even the word complex makes it sound like it's, higher risk, when in fact it's not.
Yeah.
So one thing you said in your bio in my intro is that you deal with high net families, foundations, and corporations. So what the heck is a high net worth individual? What does that mean to you?
It can mean anything. We generally define it as people with $1 million in investable assets.
Now, I want to flesh that out because a lot of people don't actually know or understand this. And it's just because, again, part of it is that high net worth changes depending on where you are. It could be 2 million, it could be 5 million. Here you're saying 1 million, which is fine. Now, investable assets, those are bankable assets. Those are the portfolios. So I would bring a portfolio of bankable assets, my stocks and bonds, my funds, and that's $1 million. I don't really care about what your value of the house is. Is that fair to say?
That's right. That's exactly.
Okay. Now, one thing that I think that some asset managers or some advisors miss out on is that they focus on bankable assets because in a lot of cases, the net new money is what drives your promotion and bonuses. Everything about a bank is net new money. We need to bring money in. But what happens in a lot of cases is, I run a small business and maybe in 10, 15 years, I'm going to sell that small business, liquidate the assets and generate $20 million.
Yeah.
Or maybe I've got 3 or 4 houses, a couple of rental properties, a place at the lake, and my own house. And maybe I'm divesting, which is what's going on right now in the Saskatchewan market. And so I think at times that focus on the net new money and the bankable assets, or as you say, investable assets, you miss out on clients that are potentially lucrative once they liquidate. And there's so many people in Saskatchewan that don't have succession planning for their business. They're not going to give it to their kid. Their kid's not going to keep in, and so you're not liquidating. And it's just funny because I'd see that a lot in Europe, where a lot of the advisors were taking more of a holistic approach to say, okay, over the next 10 years, what kind of relationship can we develop? And interesting, this is an old story with Price Waterhouse from way back when. Atco Trailers, or Atco. They were a crappy little company making trailers. Like literally. No one wanted to be their accountant.
Yeah.
And then someone at Price Waterhouse said, let's give them a hand. And that became a very profitable relationship over time as they grew. And I found that the same when I was running an oil company. We were a junior oil company, couldn't even get a return phone call from the TDs or the CIBCs, or I'm sure BMO would have called us, but the only bank that would talk to us was National Bank. And to this day, I have a strong appreciation for National because they provided us debt financing when no one else would. And they said, okay, it's not a lot of money, we'll take a chance. And they looked more at the people behind the venture than just the assets themselves. And I think that happens in a lot of cases where we overlook the value. But the other thing I want to say with your business model, and it's not just BMO, this is the same with Scotia, with what we discussed with Robin. You charge clients, presumably, based on, there might be some fee income in there, but it's disclosed, but it's primarily assets under management, AUM. And I'm assuming, and you don't have to tell me, but just in general, the more money I bring to you, the better deal I get. So if I'm bring $1 million and you want to charge me 1.5% per annum to do all your work for you, if I bring in 5 million, maybe that drops to 1.25 and so on. Now, the problem with the assets under management approach is that you can't, in many of those advisor roles, if I brought in 500,000, you don't take that client on because it's not feasible for you. So is that an issue, or is that something that you've got to deal with clients who would like to deal with you but just lack the bankable assets?
It is sometimes. It can be with management actually. As you were talking through this and looking, saying the part of understanding the clients and the kind of holistic picture and what does it look like over the long run. I was thinking I have one of my best clients when they came on. They're well below the $1 million threshold, and I really had to fight with management to get them in. And I kept saying there's this potential, and now they're one of my best clients. And we're not talking 15 years later; we're talking 2 or 3 years later. And it's come on, open your eyes here. So I guess I really think the main thing is it's about fit. And it can occasionally, for me, I guess it just is rarely an impediment. The bankable assets, if this is the right place for you to have their money, if we're a good fit for each other, if we're a good team, let's do it. It is my capacity for those kind of clients. I could probably have 500 of them.
The problem is with those, it's kind of in my business. I'm a fee-only fiduciary. And you need a critical mass because it's like coming to a lawyer. I can't charge you $50 an hour just because you've got 50,000 in assets. The work is the work is the work. And to a similar extent, that's the same with the banks, is that for the all-encompassing annual fee of 100 basis points or whatever you charge for that $1 million client, you provide certain services.
Yeah.
And the bank needs to generate. The difficulty that I have with banks in general, and this is more on the debt side, is that what you see with a lot of banks is, again, in the old days, say the 1950s or 60s, you had that personal relationship with your banker, and so they understood and they had more flexibility. And now it seems to be more, we put the numbers into a computer and it spits out yes or no, or it might get shuffled off to Toronto from someone that's never met the client. And I know a couple of clients personally, and they just there's no relationship. It's like someone from Toronto calls them up and says, no sir, we can't do this loan for you. And it's well, I've got all this other money, and the one client I'm thinking has got millions, but he banks with 5 or 6 banks for perfectly good reasons, and I would recommend banking with multiple banks so you can leverage one off against the other. But again, there's no understanding from someone in Toronto. They just see the spreadsheet. And again, it'll be interesting because you're seeing some more. I think you're going to see a market, whether that's with Q-Trade, Quest Trade, these smaller individual brokers that only do one thing, of starting to maybe develop more personal relationships. Either that, or you go completely to a Wealthsimple model where it's all completely computer generated.
Yeah, and I would say it is the role of a relationship manager. Honestly, that is the reality of it. These things go through a loan process, and the numbers are the numbers, and they actually want to take that subjectiveness out of it, because I think that's gotten them into trouble in the past, and you want to evaluate people fairly. But it's still within that framework. A good relationship manager can still find ways to get things done. They can't change the numbers, but it's okay. Instead, what if understand the client, say, hey, this is what you want. What if instead of doing this, we change it and pledge these assets, and then we can loan this way, and the interest rate's going to be a little bit lower that way, and you kind of get it I think that is where a relationship manager can come in and understand the client. Can't fudge the numbers, but can find a way to make it happen.
Yeah, I agree. And I got to say, that is the one advantage with, say, the UBS or, the quote-unquote Swiss bank model, is you're paying way more. If I used UBS, which there's a couple of outlets in Canada, over you, for example, as an advisor, I'll probably end up paying double what I'd pay with you. But I know that if I pick up the phone and make a phone call, the service level is immaculate and the turnaround time is, bang on, because the client, to me, it's kind of comparing it, and I'm not talking BMO, but it's like comparing a Ford to a Audi or a Porsche. If I take my car in for servicing at the Porsche dealer here, which is actually the same guy that owns the Ford dealership, Von Wyatt, but if I take my car into the Porsche, I have certain expectations on the service level because I'm paying that premium. Yeah. And that's sort of the Swiss bank model, is that clients will pay a premium, but in return they expect that higher level that you can't just give out to everybody. It's just not practical. So the Swiss banks tend to go more focused in who they deal with, and that's more the ultra high net worth clients, not the the mass affluent or the high net worth.
Yeah.
So the other two things you talked about were foundations and corporations. First of all, what is a foundation, and how does investing, the investment needs and strategies, differ between a high net worth individual and a foundation or a corporation?
So foundations, I guess foundations is maybe I could well have said trusts or foundations, or I guess, corporate money.
Is that primarily charitable, like non-profit organizations that you would term foundations?
That's probably right. And honestly, I could, that may not be the right word to use there, foundations. I do have a couple foundations. Two, I think. Might be three. Two. Anyways, and I have more trusts. I have a number of trusts. In many ways, they're not all that different. Maybe the difference is there's practical differences, like you come with a different set of paperwork and a different, different W form than an individual. Maybe the one big difference would be, trusts, foundations, corporate money. They will sometimes, with trusts in particular, they'll come with like a trust deed or a trust indenture, and it's a specific legal document, and you have to understand it and manage according to that. Whereas when you're taking on a client, it isn't that black. There's nothing like that.
Yeah, in the old days, everything's old days these days. But in the old days, you had, with a trust, like a real trust, you had, the standard of care was essentially don't lose any capital. It was zero risk tolerance.
Yeah.
The prudent man principle.
Yeah.
But then over time it morphed into the prudent investor concept.
Yeah.
Because what was happening is that the kids were coming along after, mom or dad passed away, and they're like, over the last 30 years, this trust has earned me like 0.3% net return, whereas the S&P 500 and the Swiss stock exchange have gone up like 8% per annum. And so that's sort of what morphed that, and that's why the investment needs and the expectations become more parallel. But I would say probably with like nonprofit organizations, which is what I thought you were talking about initially with the foundations, is they still have a emphasis on preservation of capital. They're not, even you look at our own board where you were the treasurer a couple of years ago, we're not investing in stocks and bonds, we're just investing in T-bills because we just want to keep our capital.
Yeah, exactly. And I guess I would say I would agree with that. Generally the trusts and the foundations, that I manage, they would generally have a preservation of capital, objective, maybe more than individuals, but not necessarily. I do have some clients who I would say they look at it that way as well. Yeah.
That's interesting. Now, at BMO, as an investment counselor, we talked know your client, know your customer, KYC. Partly you do that because it's just good practice, but partly because you've got legal and compliance staring over your shoulder to make sure that you follow the policies and procedures. And there's things like IROC, which is a regulatory board that monitors. So I'm curious, you've got your CFA, you've got this Masters of Economics. Did you have to take any other internal courses to satisfy legal compliance in what you do?
Yes. Yeah, I mean, there's internal BMO courses that we have to take. There's money laundering stuff. That's kind of, I think that's kind of there with every big organization.
Did you have to take any, like there's the Canadian Securities Institute, and there's a whole bunch of certification programs and courses like Robin talks, the Wealth Management Essentials, these sort of things.
Yeah, I actually haven't really had to do much of that. When you have your CFA, that gives you exemption from a lot of that stuff because they say, CFA kind of covers this, so you're good. But there still is the odd one. Life insurance would be a good one. I'm actually just kind of working on that right now, getting the license for that. I got to write a whole big set of tests for that one.
Now, that's an interesting thing because I talked a bit with Robin on life insurance because she has her insurance license. So when you did your CFA program, not that long ago, what was it, like 20% was on life insurance, 30% on life insurance? How much life insurance was in the program?
Not much. At a high level, there might be a couple questions, but I don't think there was any technical stuff.
What about taxation?
Again, indirectly, there's lots of stuff in there on taxation.
Now, why would the CFA program not really get into things like life insurance or tax?
Yeah, because I mean, it's jurisdiction specific. Life insurance. Well, life insurance in Canada is provincially regulated, and there are different rules just in the province, which is kind of crazy. But country to country, they're very different. Yeah.
And to me, on the one hand, that's the beauty or the value to me of the CFA designation, is it's a truly global designation. If I'm hiring someone from Australia, Singapore, Germany, and they're a CFA, I know the exam they took, I know the curriculum that they took. If I'm hiring a CFP, a financial planner, that's very Canadian specific, if it's Canadian or American. And because it's country or provincial in the case of life insurance, you can't have that in the course to any detail. So if you do want to work with someone that's selling you life insurance and they're a CFA, they probably didn't learn a whole heck of a lot about life insurance in the program, so you'll want to see other skill sets. And so that's sort of the downside perhaps of the CFA designation, whereas if you did the CFP, the Certified Financial Planning Program, you get into a whole bunch of RRSPs, TFSAs, dividend tax credits, universal life policies, because I know BMO sells a universal policy, that you don't see if you're doing the CFA. So you do have to, if you're looking for an advisor, you want to see that Canadian or Saskatchewan specific skill sets.
Yeah, exactly. And the life insurance course, it's like, this specific thing for this specific thing, and there's no rhyme or reason to it. You just got to memorize it. But like you said, CFA, this stuff all fits back in with CFA, and it helps give you context.
It's almost in some ways to me like the macroeconomics. You need to understand the high level stuff so that the lower level stuff falls into line.
Yeah.
So we've talked about some skills. what about soft skills? A few minutes ago, you talked about communication skills, writing skills for reports. You need to make sure your writing is strong. If you look over your career, what sort of skills, maybe soft skills, presentation, industry experience, would you have liked to have said, I should have taken the Dale Carnegie course, or I should have taken Toastmasters, or I should have joined a service club so that I worked on my networking when I was like 23, 24, and then had that when you were young and not say, okay, I want to develop that now? Is there anything out there?
That's a great question. It's a little bit tough to answer on the spot. I have to think about that a bit, but I mean, there's those things that each of us just kind of naturally happen to be good at. I mean, we were talking about that executive presence thing before. There's probably 1% or 5% of people, like, they just got that. Good for them. But we're not good at everything. I would say, it's just public speaking. Most people, that's something that a lot of people find really hard. I know I do, and through practice and little bits, you can take the edge off. I already talked about the writing. For me, that was a really big thing. Honestly, the reality is nowadays, a lot of specific computer programs are just, it's just essential that you're really good at these things. It's not enough just to know how to write a sentence in Microsoft Word. You really need to know how to make that thing work for you in a corporate environment.
That's interesting. Not quite the same thing, but when in one of our presentations that Robin and I did on evolving skill sets in the high school series, and that's actually for everyone, it's some great information in there. But one of the big skills that CFA surveyed globally said over the next 10 years is the ability to merge the human intelligence with artificial intelligence, because again, you're seeing the technology, and as I've said before, that's an advantage for today's young people, is that they grew up with the technology. And the older CFAs or the older economists didn't really have that when they were in high school or college. So understanding that gives them a leg up on moving forward in the world. And the other thing that they said, which you kind of touched on in a few of your comments, is that individual work is becoming less and less important. It's about building teams and having complementary skill sets. So you don't have one generalist that does everything. And we used to see that in investing. You'd have the rainmaker, the good old boy that would take you out and have a few drinks and tell you the good stories. And that's how you generated business. Now people want expertise, and they don't really care about the good story or the fancy lunch. It's just, what was my return? What was my cost? And you see that again in a lot of investment counselors or portfolio managers, is building these complementary teams. And another aspect that Robin and I discussed was women in finance, is that more and more women are controlling the finances in the family, whether that be because they're working on their own themselves, just straight demographics where men die younger, so the women may be forced to inherit and the workload for the finances. But a lot of women seem to have more comfort working with a female advisor. And so again, if you're a white male in his 50s, maybe it's a good idea to bring in like a younger female, because you're attracting a wider potential client base. So again, those sort of team dynamics are becoming more important. And I know you sort of run a fairly small shop right now, but what are your thoughts on the team dynamics and that sort of side of it?
Oh, it's like, no question, it's just huge. I'm really not a quote person, but I think they're like a Steve Jobs. I think it's Steve Jobs' quote. About a good team is when, the end result is greater than the sum of the parts. And I mean, I just couldn't agree more. When you can have, and sometimes you don't even know what's going to make a good team ahead of time. You think you got all the elements and you put it together and it just doesn't happen. And then other times it will really surprise you. But I'm just a big believer. You're stronger together. And if you're not, then you probably got to switch up your team, because you should be.
And the sort of the counter to that is, I often meet young people. I was, a strong candidate for the job. I should have got the job. I could have done the work on day one. Well, a lot of companies or employers or bosses don't want the person that can come in on day one and do the job. They want someone that's a fit with the team. Maybe they bring in a niche skill set. But also, in my own personal view, is that if I hire you, Dan, and you can do the job on day one, in 6 to 9 months, you're looking elsewhere, because there's no learning curve, there's no motivation, there's no excitement. And so again, what you often find is the best person for the job isn't the one that's hired, because we're looking for niches in that team, or we're looking for someone that will have a relatively low learning curve, but it'll still take them a year or so to get up to speed, and then they'll work another year, and then they'll start looking. So I've got them for 3 years. I'm not just going to hire somebody that can do the job perfectly and is gone.
Yeah, I want to give you a bit of credit there, Jordan. I mean, you're a guy who, I think maybe thinks strategically and thinks a little bit kind of, thinks for yourself. Maybe, the reality is sometimes you're in a mass hiring process, and it's an HR department, and they're ticking the boxes, and that's what it is. And truthfully, I think that really works for some people. And then in other situations, you have, maybe somebody more like you, where they're kind of wanting to see, maybe look a little bit deeper and get a bit of that deeper level understanding and think ahead a little bit. And other people can be a much better fit for those kinds of things. So it's, I really think as a candidate, somebody who's out there and getting going, it's just the sooner you can identify who you are and what you're good at, and really what what you want to do, that's really the way to make the magic happen more quickly.
Now I'm gonna, just devil's advocate, I'm going to disagree with two things you just said over the last 5 minutes. Is you talked about looking at what you're good at. I would actually argue that what people overlook is that you should actually be looking at what you're poor at. And I always use the example of the grumpy uncle, which tends to be me. You need to have somebody that'll take you aside, look you in the eye, and say, you suck in these areas. You can't write a report. Your punctuation's terrible. Your presentation skills are awful. We're in a world where no one wants to offend, and I see a lot of younger people where people just tell them, oh yes, that's a fantastic. After this session's over, I'm going to tell you, Dan, that was fantastic, even if it wasn't. But that's the world we're in. Now, I would much rather take someone that I'm mentoring, a young person or a relative, and give them grief now that you need to bone up in this area, so that when they get to the interview, they're prepared. And it's not, yeah, you're perfect as you are, and then you go in the interview and you get nailed. So, try to find somebody that'll point out where you need constructive criticism, I think is the term. And then go out. If you're not a good public speaker, then you need to look at things like Toastmasters or Dale Carnegie. If you need to dress a certain way for a certain type of employer, maybe you need to go out and hire somebody to give you an idea on a wardrobe, or find a relative that has a good fashion sense. So there's a whole bunch of things, but I think people tend to just sort of load up in their comfort zone. So I'm good at this, so I'm going to really exploit that. When the reality for me is, I need someone to tell me what my weak points are and then address those. And in my case, again, I've used this example before, is I'm actually quite an introvert. I not comfortable in big settings. I'm not comfortable presenting. I'm not comfortable dealing with people I don't know. Suddenly I'm in charge of the global trust operations at UBS. And one week I'm in Singapore, Hong Kong, Bahamas, Cayman. I've got to present. I've got to meet regulatory people. I've got to take teams out for dinners every night and make chit chat. And you're out of your comfort zone, but that is part of the job function. So you learn to deal with that. And if you can't, someone else will. Because it's, that's part of the job. It's just as important that I show leadership and show that I care about the staff by taking them out and listening to them and meeting them than all my technical skills. So that was a weakness in my game, and I'm not sure I compensated for that over time, but I did try to focus on that and work on my presentation skills, work on my interpersonal skills.
I mean, that's a great point. It's really, a different, I think in many ways we're actually saying the same thing, but from the top level, like, it sounds quite different. Like, there's going to be certain things that if you can't do this, it's going to be a problem, right? Plain and simple. And so those are the things you got to work on.
And I think that, the other thing I would say is that we're also in this world of immediate gratification. So when I was young, and even now, like, I taught martial arts. Yeah. And if you can't learn to become a black belt in 6 months, that's not for me.
Yeah.
But the skill sets that you need to learn today are multi-year. The CFA designation is sort of a 3, 4, 5-year program, depending on how long it takes to get through. Learning a language, because I'm a big advocate of language and culture skills. You can't learn Spanish or Italian or German in 6 months. So you want to sort of sit back and say, here's my destination. Here's where I think that I want to go. And maybe you change your mind halfway through, but look out sort of 5 years and say, how do I get to this destination in 5 years or maybe 3 years? And you want milestones along the way to chart your progress. And then you start building for it over time. Because again, that was the other thing with jobs, not Steve Jobs, but just careers, is that if you come to me and I say, well, I'm looking for someone in the CFA program. Well, I'm thinking of doing it and I want to do it and I will do it if you hire me. As opposed to, well, I realize it's going to take 3 to 5 years to get my CFA designation. I started it now doing a job that I don't need it for because I want to make that segue. Or one of the things I always mention here in Saskatchewan, and one of the young guys that I deal with wants to be a police officer. I said, well, have you, spent any time learning Tagalog? And he's like, what are you talking about? I said, well, Filipino is now the number 2 language in Saskatchewan. So again, maybe that's just the strategic thinking, but if I went to a job interview and I'm looking at the guy's resume, what the heck is this Tagalog? Are you Filipino? No, but I realized the second prevalent language in Saskatchewan now is no longer German, it's Tagalog. So as a police officer, I may be interacting with these people. And you go, oh, this guy gets it. But you can't just sort of say, oh, in 6 months I'll be there. You got to, look ahead 3 to 5 years and say, how do I build those skills?
Yep.
So now that we've discussed a few things, let's wrap her up so you can go home to
I'm having a good time.
Your couple of kids. Did you say earlier you had unicorns in your house with all the COVID and things?
Unicorns and rainbows everywhere we look. Today we put it was 32 degrees, so today the sprinklers went on, and I was listening to my girls out there run back and forth, and it was like better than Disneyland, run through the sprinklers, and I'm just thinking, wow.
I'll be over later. Now the one thing that I talked with Robin about, and before we get into the wrap up, I'm interested in your thoughts, is there's a big argument about the CFA designation. Should I begin the program immediately after university, or should I wait 5 or 10 years and develop some actual on-the-job career experience. In my case, I probably waited about 10 years because I was a professional accountant. And I got to say, I didn't even think about the CFA until much later in life. But it was my financial accounting background and my time as a controller and VP finance that helped me get through the CFA designation. And I think that that's something that the young people, if you start out the program right out of university, you lack that practical knowledge and skills to apply. But the flip side is, you come out of college, you're fresh, you're still in the study mode, and you don't have a 4 and a 5-year-old running around the house while you're trying to study all weekend, because studying for the CFA is a onerous proposition. So I'm just curious your thoughts, like given where you are in life, should you have started earlier or should you have started later?
I mean, it's obviously situation specific. I think in many cases the ideal is probably to do it a little bit later on, but it can be hard to do that. And the reality is, if you wait to do it, is there a chance you maybe will just not end up doing it? Probably a greater chance of that. So I would say if you're one of these people, you're locked into finance, you're going to be an equity research analyst, like you're on your way to Toronto or you're on your way to Boston or New York or something, like you may as well just get in there and do it. You need this thing, you want to do it. What I would say is, what I do get sometimes from people doing their charter, which is, it's kind of like, hey, I don't know what I'm gonna do, but I think I'm gonna get this charter, and then that's gonna get me a job. And that, I guess that is maybe sometimes where I see problems, because usually, I think more often than not, those are the people that maybe don't have the motivation to get to the end of it, because there isn't a specific goal in mind. So I would say probably in many cases it can be good to wait a couple of years. I think that's probably the ideal, is to get out, get some real world, get some work experience, kind of get some more idea on where your blind sides are and that kind of thing. But but don't wait too long, and it's situation specific.
And I think way back when, not that long ago, maybe 20 years, that was actually the requirement, was that you had to have some experience and you had to have somebody attest that you were working in the profession. Whereas now we're in a phase where you can start the program in your 4th year, which I'm not sure is a pro or a con. So before we wrap up, the question I like to sort of ask everybody is, looking back at 17-year-old, grade 11, 12 Dan, 24-year-old Dan just coming out of university, what kind of advice might you give yourself, whether it be hard skills, soft skills, any advice that would have made your path easier that you could share with someone listening that's in the same position today?
Yeah, I don't know if I would make my path easier, because I think a lot of, looking back, and maybe this is what you just said, it was the hardship and getting through the hardship that kind of resulted in the results. I would say I would say to myself, it's important to not really try to be true to yourself about what you want to do. And I think I was kind of focused on, hey, like, if you're a surgeon, that's a really good job. You make a lot of money. Well, is that a fit for you? This is what it's like, but I really want to be a surgeon, I would really try to, tell people to try to marry like that kind of natural fit, like what they want with what they're ultimately doing, because I think that's how you achieve the greatest results. And I think sometimes for me, I sometimes got away a little bit from that, and and that maybe just slowed me down a little bit.
Okay. Before we wrap up, is there anything else you'd like to add on any phases that we've covered today, or any new thoughts?
There's probably lots of stuff, but no, that's good for now.
Okay.
Yeah.
Before we close, I'd like to take a moment and thank our corporate sponsors. Our sponsors are very interested in building the next generation of finance professional, whether that be a CFA Charter holder or any other related field. So I'd like to publicly thank them for their continued patronage of the CFA Society. And if you're interested in any additional information on the CFA designation, careers, diversity matters, all these sort of things, please be sure to visit our CFA Society Saskatchewan website. And there's plenty of information on the CFA designation at the CFA Institute website itself. So I'd like to thank Dan again for his time today, much appreciated, and some great commentary. And I'd like to thank you for all listening. So thank you very much.